Good morning. I'm Drew Holley with BIS Benefits. We are a commercial insurance agency and employee benefits. This is America's most boring podcast. I am joined by two guests.
My name is Jesse Couch. I am a partner with BIS Insurance out of Atlanta, Georgia, and happy to be here today.
Good, thanks for having me again, Drew. My name is Eric Keller. I work for Archie Specialty. I'm, as Drew mentioned, a wholesale broker. I run a production team here in our Atlanta office. I specifically specialize in management liability, professional liability, cyber liability placement. So I've been doing this for over a dozen years now. So this has been my only bread and butter.
So let's talk a general overview. Eric, what is management liability? What does it cover? Who's it protect? What are the variations? What do you see? Is it different from one industry and another?
So management liability is a very broad, all-encompassing term for essentially four different types of coverage. There's directors and officers coverage, which covers directors and officers of the insured, or actually entity itself. Then there's employment practice liability and fiduciary liability and crime insurance. So those four components make up what you consider managed liability. Every carrier has different forms based upon whether it's a privately held company, a publicly traded company, or even a nonprofit. And then even within specific industries, we have different forms and different types of coverages that we try to make sure we are placing for that specific industry to cover them correctly and cover that exposure. So
yeah, I like to use the example like workers' comp. Most of the audience would understand that a coal miner who is a dangerous job would have a higher risk, maybe different questions than an insurance agent that's biggest risk might be carpal tunnel, right? Mm-hmm. Yeah. So directors and officers, let's start with that.
The main thing directors and officers insurance covers is directors and officers themselves. It is the ultimate level, like personal protection for their own personal assets, resulting from any liabilities or wrongdoing they might be accused of making in their capacity as a director or officer of the company.
So they could be accused of, maybe firing someone out of a discrimination, and they know they didn't do that, but they're still being accused of it.
Of course.
Having directors and officers insurance could protect them personally.
Of course.
And the company, or just them personally?
And the company. So that type of discriminatory or wrongful termination claim would actually be picked up under the employment practice liability coverage part of a managed liability program.
Okay.
But for their directors and officers themselves, and the traditional D&O claim typically involves either some type of shareholder dispute, something to do with an investor, maybe a creditor issue in the event that there's some type of bankruptcy liquidation, competitors, regulators. There's a whole number of facets. But the D&O program covers both the directors and officers primarily, but also extends some coverage for the entity itself in the event that the entity was named in the claim as well. So
Got it. So if you are in a type of business where attorneys are getting involved or might sue, this might be something out of necessity you might want to have to protect yourselves. Jesse, if you're a company with 2 employees and you just got started yesterday, let's use extreme examples. Do you see a lot of them having this type of insurance, or you see it as they mature and grow?
Yeah, for smaller privately held companies, we don't see a whole lot that buy directors and officers liability insurance. If you're a nonprofit, that could be a church, that could be a charity, that could be your homeowners association. Those are a lot of times volunteer jobs, and so they will have a board set up, and they're not getting paid for that. So of course they want to say, well, hey, I'm happy to help you guys, but if something happens, I want protection. So those smaller types of entities may still see more of a need for a directors and officers policy than a small privately held business.
I imagine as just any company gets more established, they get $1 million in revenue, they get 5 million, 10, 20, even if they may not be susceptible to being sued, it's probably not a bad idea to just give you further protection. Is that fair?
Yeah, every client we work with has a different risk tolerance. Some are of the mindset that like, hey, if there's insurance that can protect me, I want to know about it, and I would like to potentially buy it if we can afford it. And then there's some that are risk takers. They just don't see the need to buy that kind of stuff unless it's required by a contract. So There's different needs that drive those decisions. It can be just for the owner's risk tolerance, or could be driven by their clients that they work for.
Yeah, a lot of times for small companies, especially if it's a startup, if they have investors, say it's like venture capital, private equity coming in and invest, those PE firms will typically require that they purchase D&O insurance at that level in order to provide some protection even for their investment itself. So there's different requirements based on, if there's a lot of outside new investors coming in, a lot of minority shareholders, that raises the level of exposure significantly, even for a small startup company. So.
Got it. And what's the biggest difference between a D&O and an EPLI? And for the audience, that's employment practice liability. Is that just more broad to protect the company but not specific people?
So the employment practice liability covers specifically employment practices, meaning like any type of wrongful termination, discrimination, anything to do with handling or managing your employees, and any suits brought by those employees or even potentially third parties. So like if you're a restaurant, say you're a sports bar, you have customers come in, say your customer alleges you were discriminating against them, or, based on their disabilities or racially, whatever it is, then that type of litigation, that type of lawsuit would be covered under an EPL policy.
Whereas a D&O, it may not cover that, just depending on the contract?
Correct. So the D&O is not meant to cover that component of it because it's supposed to be a bundled product. So typically, most insurers buy the D&O, the EPL, the fiduciary, the crimes,
And it kind of stacks on it. Yeah, and for the audience, it is, just as natural consumers, a lot of us can get frustrated, auto, home, business, where I feel like the insurance carrier isn't covering or meant to not cover. And fair or not fair, there can be some truth to that. And so if you don't have a good broker, even though it's your buddy, your second cousin, your next door neighbor, if they don't understand the gotchas, the things in the contract or not in the contract, that's the difference between claims getting paid or not. And so even you just explaining the difference between D&O and employment, those are the things of why you really need an expert broker. The benefits of using experienced agency and a team like Jesse and Eric is they can give that protection. We'll just end really quick. What's fiduciary liability and crime? What are some things the audience would need to know? And how many carriers, Jesse, have you seen that do this type of coverage? Is it just one or two? And for the audience, again, your State Farm agent is just a State Farm agent. The carrier is State Farm. We are brokers, so we have access to hundreds of different insurance carriers, names like Hartford, Travelers, Selective. How many do you see that do this type of coverage?
There's a lot out there, and where it can get confusing is sometimes you'll get a small business policy that will have some employee theft coverage, but it's only going to be theft of the company's property or money, right? It's not going to cover the third-party coverage, which would be your employee going into your customer's home, stealing that Rolex or the diamonds. Alleged or not, it's just something that the business owner would want to have in that way. When you see bonded and insured, that's most of the time for those types of plumbers, they're talking about bonding as in a fidelity bond or crime coverage. Just meaning that, hey, if something happens, there is a theft, your customer's covered, the business owner's covered, they don't have to worry about that. It helps with just peace of mind and just giving your customers peace of mind that they're going to be taken care of if something were to happen.
And the main exposure covered under a crime policy is simply employee theft. Is you have an employee who's stealing from you, whether it's a fraud they've been committing for a number of years and they've somehow stolen $1 million plus, or even whether it's material, equipment.
I think the biggest thing, we'll end it on this, is in the world, unlike, say, employee benefits, auto, home, in business insurance, you're protecting yourself from a lot of risks, but there's layers, there's stacks. And whether it is your specific industry or your clients, or if you're subcontractor, the contractor's requiring these elements, but it really kind of comes down to, do you want this extra protection or not? But there's no ironclad protection of everything. But certainly, as you think of maybe a general business owner policy, that's very general. It's going to give you some protection. And if you're uncomfortable with some of the loopholes, if you want to call it that, stacking on of extra coverages gives you that protection.
Of course,
so, again, thank you, team, for coming in today. If you have any questions related to the coverages we talked about today, or any business-to-business insurance, feel free to reach out to BIS at bisbenefits.com. Thank you.